On August 11th, information about a significant financial crisis emerged in China's financial sector. At least 5 trust funds are expected to halt payments, despite early denials by trusts like Everbright Xinlong Trust and others. Senior industry figures express pessimism, and scholars warn that the country's fragile economy might severely impact Chinese society. Impending crisis at Country Garden, a Chinese real estate company. Firstly, Country Garden faced difficulty meeting a $22 million debt deadline. The company acknowledged its challenges in a statement to the Hong Kong Stock Exchange on August 10th. The report, cited by the paper, indicated an expected net loss of around $7.5 billion, or 45 to 55 billion yuan, for the first half of this year, marking the first midterm loss for Country Garden since its listing 7 years ago. According to credit rating agency Moody's, the company faces approximately $4.3 billion in debt due by the year's end, posing a substantial risk of default. Lao Man, an economic analyst, observed that on July 30th, Yang Huiyan, chairman of Country Garden's board, donated 20% of the company's shares to the newly established Guoqing Charity Fund in Hong Kong. This evident move indicated that Country Garden was preparing for a storm. When the company declares bankruptcy, public welfare funds will be liquidated. The Duong family's shift of assets can be seen as an attempt to evade debt and hold on to their assets. Lao Man predicted that if Country Garden faces a crisis, hundreds of thousands of businesses, above and below, could go bankrupt. Local finances would face tremendous strain, and numerous real estate projects could be suspended. However, whether homebuyers can stop repayment of their mortgages remains to be determined. These conflicts may ultimately gather, shaking the foundation of the CCP's rule.